Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI consistently falls below 50, indicating weakening momentum. The forecast for the next week predicts continued downward pressure, with prices ranging from $103,900 to $97,300. The Bollinger Bands are contracting, suggesting increasing volatility and potential for a significant move. Given this context, a short selling strategy is recommended. We will initiate a short position at $103,900, placing a stop-loss order at $105,500, just above the upper Bollinger Band to protect against a sudden reversal. The initial target price is set at $97,300, aligning with the lowest forecast price. To refine the strategy, we'll incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, we'll tighten our stop-loss to $103,600. Conversely, if the RSI rises above 50, suggesting a potential trend reversal, we'll consider closing the position and reevaluating. The portfolio will prioritize the short selling strategy, as the overall trend and forecast indicate a favorable environment for this approach. This approach balances risk and reward, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Ethereum has shown a significant downtrend, particularly evident in the recent price action dropping from $3,900 to $3,280. The forecast for the next week indicates a continuation of this downward trend, with prices predicted to fall further to $2,970. The RSI consistently below 50, with recent readings below 35, confirms the bearish momentum and suggests the asset is oversold. Considering this, my strategy will focus on shorting opportunities. I recommend entering a short position at $3,420, placing a stop-loss at $3,500 to protect against a potential reversal, and setting a target price of $3,030 for a substantial profit. To refine this strategy, I will incorporate the Bollinger Bands. The price consistently trading below the lower band reinforces the downtrend. I suggest a secondary short entry at $3,350, with a stop-loss at $3,400 and a target price of $3,000. Combining these two strategies, a portfolio with a 60% allocation to the first short position, entry $3,420, stop-loss $3,500, target $3,030, and a 40% allocation to the second short position, entry $3,350, stop-loss $3,400, target $3,000, will provide a balanced approach to capitalize on the predicted downward movement while mitigating risk. This portfolio prioritizes capitalizing on the confirmed downtrend while incorporating technical indicators for enhanced precision. Based on the historical data and forecast, XRP is exhibiting a downward trend. The RSI consistently fluctuates but generally remains below 50, indicating a weakening momentum. The forecast for the next week projects a continued decline, with prices dropping to $2.09. Combining these signals, I recommend a short position strategy. Enter a short position at $2.26. Place a stop-loss order at $2.31 to protect against unexpected upward movements. Set a target price at $2.09, aligning with the forecast price. This strategy aims to capitalize on the anticipated downward trend, with risk management measures in place. To enhance the strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it suggests a potential shorting opportunity. Given the current trend and forecast, a conservative approach is warranted. Therefore, if the price reaches $2.3, consider initiating a short position with a stop-loss at $2.34 and a target price of $2.17. This blended strategy combines RSI signals with Bollinger Bands confirmation, offering a balanced approach to maximizing returns while managing risk. Based on the historical data and forecast, BNB shows a clear downtrend, especially with the recent price action and the forecast for the next week indicating continued decline. The RSI consistently below 50, with several days below 30, confirms the oversold condition, suggesting a potential short-term bounce, but the overall trend remains bearish. Considering the Bollinger Bands, the price is approaching the lower band, further supporting a potential short-term rebound. Therefore, I recommend a contrarian strategy focusing on short-term opportunities within the downtrend. My proposed strategy is to initiate a long position at $949 with a stop loss at $968, just above the lower Bollinger Band. The initial target price is $989, aligning with the first day's forecast. If the price reaches $989, we will move the stop loss to the entry price of $949 to secure profits and mitigate risk. If the price continues to decline after reaching $989, we will close the position. This strategy aims to capitalize on short-term bounces within the prevailing downtrend, balancing potential gains with robust risk management. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has been consistently declining, with the forecast predicting further drops to $136. The RSI consistently below 50, with recent values nearing oversold territory around 30, suggests the asset is undervalued but also indicates continued selling pressure. Considering the support price of $154 and the current forecast, a contrarian strategy focusing on short positions is warranted. I recommend initiating a short position at $162, placing a stop-loss order at $165 to protect against a potential reversal, and setting a profit target at $154, aligning with the established support level. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently trading below the middle band confirms the downtrend. The forecast price of $157 presents another entry point for a short position. A stop-loss order at $161 and a target price at $154 would be prudent. The RSI reading of 29.0 indicates an oversold condition, suggesting a potential bounce, but the overall trend and forecast support a bearish outlook. Therefore, the most efficient portfolio combines the RSI and Bollinger Band strategies, consistently targeting the $154 support level with a stop-loss slightly above recent highs. Based on the historical data and forecast, TRON shows a downtrend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast prices for the next week further reinforce this downward trajectory, predicting a continuous decline. Considering these factors, I propose a short selling strategy. We will initiate a short position at $0.284, placing a stop-loss order at $0.292 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.273, aligning with the forecast price for November 12, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the lower band, suggesting potential for further downside. If the price touches the lower Bollinger Band of $0.273, we will adjust the target price to $0.273. This combined approach, using both RSI and Bollinger Bands, aims to maximize returns while effectively managing risk. The overall portfolio will be 60% short selling and 40% cash. Based on the historical data and forecast, Dogecoin exhibits a clear downtrend. The price has been consistently declining from October 23, 2025, to November 5, 2025, and the forecast for the subsequent week projects further declines. The support price remains steady at $0.162, while the resistance is at $0.182. The RSI consistently indicates oversold conditions, fluctuating between 30.8 and 42.9, suggesting potential for short-term bounces but not a reversal of the overall trend. The Bollinger Bands show a narrowing trend, indicating decreasing volatility, and the price is currently near the lower band, further reinforcing the bearish outlook. Therefore, I recommend a short selling strategy. Our primary strategy will be based on the RSI, combined with Bollinger Bands for confirmation. We will enter a short position at $0.164 on November 6, 2025. The stop-loss will be set just above the upper Bollinger Band at $0.172 to protect against a potential short-term bounce. The initial target price will be $0.142, aligning with the forecast low for November 12, 2025. If the price reaches $0.142, we will reevaluate the situation based on the RSI and Bollinger Bands. If the RSI remains below 30 and the price is near the lower Bollinger Band, we can consider a second target price of $0.132. This strategy aims to capitalize on the prevailing downtrend while mitigating risk with a well-defined stop loss. Based on the historical data and forecast, Cardano is currently in a downtrend. The RSI consistently remains below 50, indicating prevailing bearish momentum. The forecast for the next week projects further declines, with prices potentially reaching $0.455. Given this trend, I recommend a short selling strategy. We will enter a short position at $0.533, placing a stop-loss order at $0.552 to limit potential losses if the price unexpectedly reverses. The initial target price is $0.462, based on the forecast data. To refine this strategy, we will incorporate Bollinger Bands. If the price touches the lower band of $0.533, it confirms the oversold condition, strengthening our short position. However, if the price breaks above the upper band of $0.709, it signals a potential trend reversal, and we will adjust the target price to $0.601, the resistance level. This combined strategy, utilizing both RSI and Bollinger Bands, aims to maximize returns while mitigating risk in this declining market. Based on the historical data and forecast, Wrapped Beacon ETH has been exhibiting a significant downtrend, particularly evident in the recent decline from November 1, 2025, to November 5, 2025, with a sharp drop to $3,550. The forecast for the next week projects a continuation of this downward trajectory, with prices expected to reach as low as $3,230. Considering the RSI consistently below 50, often dipping into oversold territory, below 30, and the Bollinger Bands contracting, suggesting increased volatility, a short selling strategy appears prudent. We will initiate a short position at $3,710, placing a stop loss at $3,700 to protect against a potential reversal. The initial target price will be $3,550, aligning with the established support level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 20, indicating oversold conditions, we'll consider tightening our stop loss to $3,630. Conversely, if the price touches the upper Bollinger Band, signaling a potential bounce, we'll adjust our target price to $3,470. This dynamic approach allows us to capitalize on short-term fluctuations while maintaining a core bearish outlook. The overall portfolio will prioritize short positions with tight stop-loss orders and adaptable target prices, aiming for high returns in this declining market. Based on the historical data and forecast, Chainlink shows a declining trend. The RSI consistently dips below 50, indicating weakening momentum. The forecast for the next week predicts a continuous downward trajectory, reaching as low as $12.8. Combining these factors, I propose a short selling strategy. We will initiate a short position when the price touches the support level of $14.7. The stop loss will be set at $15.3 to mitigate potential losses if the price unexpectedly rebounds. The initial target price is $12.8, aligning with the forecast. To refine the strategy, we will incorporate the Bollinger Bands. When the price breaks below the lower band, it signals a strong bearish momentum, reinforcing our short position. We will adjust the target price incrementally as the price moves lower. If the price reaches $13.5, we will secure partial profits and move the stop loss to the entry price of $14.7. If the price continues to fall, we will target $12.8 and then reassess the situation. This layered approach maximizes potential profits while managing risk effectively. Based on the historical data and forecast, Dogwifhat exhibits a clear downtrend. The price has been steadily declining from $0.57 to $0.402 over the past 2 weeks, and the forecast projects further decline to $0.333. The RSI consistently remains below 50, indicating a weakening momentum, and has even dipped below 30 on several days, signaling oversold conditions. The Bollinger Bands are contracting, suggesting increasing volatility and a potential for a further price drop. Given this bearish outlook, I recommend a short selling strategy. My proposed strategy involves entering a short position at $0.435. The stop loss should be set at $0.47, just above the upper Bollinger Band to protect against unexpected price spikes. The initial target price is $0.367, aligning with the forecast price for November 9, 2025. If the price reaches this target, we will reevaluate the market conditions and potentially adjust the stop loss and target price accordingly. If the price continues to fall, we can set a second target at $0.333, corresponding to the final forecast price. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, JasmyCoin has shown a downtrend recently, with the price declining from $0.0107 to $0.00842. The RSI is consistently below 50, indicating a weakening momentum, and has reached an oversold level of 30.2 on November 5, 2025. The forecast for the next week predicts a continued decline, with prices dropping to $0.00773. Considering these factors, I recommend a contrarian strategy. We will enter a long position at $0.00842, coinciding with the support level and the oversold RSI. The stop loss will be set at $0.0078, just below the forecast low, to limit potential losses. The initial target price will be $0.0095, aiming to capture a quick rebound. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, which suggests a potential bounce. If the price breaks below the lower band and continues to fall, we will exit the position. If the price touches the lower band of $0.00843 and shows signs of reversing, we will adjust our target price to $0.0101, the recent resistance level. This combined strategy, integrating RSI, Bollinger Bands, and support/resistance levels, provides a layered approach to maximize potential returns while managing risk effectively. The final portfolio will be a long position with an entry price of $0.00842, a stop loss price of $0.0078, and a target price of $0.0101. Based on the historical data and forecast, World Liberty Financial shows a downtrend with significant volatility. The recent RSI values have been fluctuating between 33.3 and 47.2, indicating periods of both oversold and overbought conditions. The forecast prices for the next week are consistently declining, suggesting further downward pressure. Given this, I recommend a short selling strategy with a focus on capitalizing on the predicted downward trend. The entry price should be set at $0.118, coinciding with the first forecast price. A stop-loss order should be placed at $0.125, just above the support level of $0.122, to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.098, aligning with the lowest forecast price, allowing for a substantial profit if the downtrend materializes. To refine the strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, it suggests an oversold condition, potentially signaling a temporary bounce. However, given the overall downtrend, we should remain cautious. If the price reaches $0.11, which is slightly below the lower Bollinger Band, consider tightening the stop loss to $0.118. If the price continues to decline and hits the target price of $0.098, we can consider moving the stop loss to the break-even point of $0.118 and setting a new target price at $0.09 to capture further potential gains. This combined strategy, leveraging both RSI and Bollinger Bands, aims to maximize profits while effectively managing risk in this volatile market. Based on the historical data and forecast, Pump.fun has shown volatility with an overall slightly downward trend in the forecast period. The RSI values fluctuate between 40 and 57, indicating periods of both oversold and overbought conditions, but generally staying within a neutral range. The Bollinger Bands have been widening, suggesting increasing volatility. Considering these factors, a combined strategy leveraging RSI and Bollinger Bands is recommended. We will initiate a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.00349. A stop loss will be placed just below the support level at $0.0034. The target price will be set at the resistance level of $0.004, aiming for a conservative profit. To refine the strategy, we'll incorporate a trailing stop loss based on the Bollinger Bands. As the price moves upwards, the stop loss will be adjusted to the lower Bollinger Band. This helps protect profits while allowing the trade to continue if the upward momentum persists. The strategy will be adjusted daily based on the forecast data. If the forecast price continues to decline, the position will be closed at $0.0036 to minimize potential losses. This combined approach, integrating RSI and Bollinger Bands with a dynamic stop loss, aims to maximize returns while managing risk effectively in the current market conditions. Based on the historical data and forecast, Maple Finance demonstrates a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the mid-range, suggesting neither strong bullish nor bearish momentum. However, the recent upward movement and the forecast prices indicating a slight decline initially followed by stabilization suggest a potential short-term pullback before a possible continuation of the uptrend. Considering the support price of $0.373 and the resistance of $0.426, a strategy combining RSI, Bollinger Bands, and support/resistance levels is recommended. Therefore, I propose a combined strategy. First, initiate a long position at $0.373 when the price touches the support level and RSI falls below 40. Set a stop loss at $0.363, just below the support level, to mitigate potential losses. The initial target price is $0.426, the previous resistance level. If the price breaks through $0.426, move the stop loss to the entry price of $0.373 and adjust the target price to $0.457. This strategy aims to capitalize on the anticipated rebound from the support level while managing risk through strategic stop loss placement and dynamic target adjustments. Based on the historical data and forecast, Internet Computer exhibits a strong upward trend. The price has experienced significant volatility, with recent highs reaching $6.13 and lows around $2.89. The RSI consistently moves above 50, indicating bullish momentum. The forecast data projects continued price increases, with values ranging from $4.49 to $6.33. Considering the support price of $5.96 and the resistance price of $6.96, a long position is warranted. I suggest entering a long position at $4.49, with a stop-loss order placed at $4 to mitigate potential losses. The initial target price should be $5.43, aiming to capitalize on the anticipated upward movement. To refine this strategy, I will incorporate the Bollinger Bands. The price consistently bounced off the lower band, suggesting a potential buying opportunity when the price approaches the lower band. When the price hits $5.61, a second target price can be set at $5.97. If the price breaks through the resistance of $6.96, the final target price can be set at $6.33. This multi-stage target approach allows for incremental profit-taking while managing risk effectively. The RSI values above 70 suggest the asset is overbought, so a partial profit-taking strategy can be implemented when the RSI reaches $78.4. Based on the historical data and forecast, official Trump shows a strong upward trend with consistent support at $7.37. The RSI fluctuates, dipping below 50, indicating potential oversold conditions, but generally remains above 30, suggesting the trend is not severely oversold. The Bollinger Bands have been widening, indicating increased volatility and potential for price movement. The forecast for the next week predicts a continuation of this upward trend, with prices hovering around $7.53 to $8.02. Therefore, I recommend a long position strategy. My strategy will incorporate all three indicators. First, when the RSI falls below 30, we will enter a long position at $7.53. The stop loss will be set just below the support level at $7.26 to limit potential losses. The initial target price will be the resistance level of $8.02. If the price reaches $8.02, we will move the stop loss to the entry price of $7.53 to secure profits and protect against a potential reversal. If the price continues to rise and breaks through the resistance, we will adjust the target price to $8.53, capitalizing on the upward momentum. This combined approach leverages the RSI for entry signals, Bollinger Bands for volatility assessment, and support/resistance levels for price targets, maximizing potential returns while managing risk. Based on the historical data and forecast, DECRED shows a strong uptrend, particularly evident from November 1, 2025, with a significant price jump to $29.4, followed by a continued rise to $43.4. The forecast for the next week projects further upward movement, reaching $49.6. The RSI consistently above 70 indicates overbought conditions, but the strong upward momentum suggests a potential for continued gains. Considering the support price of $40.9 and the resistance of $53.3, we will implement a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 40, with an entry price of $4.77, setting a stop loss at $5.77, just below the lower Bollinger Band. The initial target price will be $11.7, aligning with the upper Bollinger Band. To capitalize on the predicted upward trend, we will implement a trailing stop-loss strategy, adjusting the stop-loss price as the price increases. As the price reaches $11.7, we will move the stop-loss to $8.54. If the price continues to rise, reaching $28.1, we will adjust the stop-loss to $11.7. Our final target price will be $49.6, based on the forecast. This multi-stage approach allows us to secure profits while maximizing potential gains. This portfolio combines the strengths of RSI and Bollinger Bands to create a high-return investment strategy for DECRED. Based on the historical data and forecast, Quant has shown significant volatility. The RSI has recently crossed into oversold territory, fluctuating between 29.2 and 52.3, indicating potential for a rebound. The Bollinger Bands also suggest a period of contraction, with the price nearing the lower band. Considering the recent downtrend and the oversold RSI, I recommend a contrarian strategy focusing on short-term gains. The forecast data indicates a potential further decline in the immediate future, however, the RSI suggests a potential reversal. Therefore, I propose a long position entry at $77.4 with a stop loss at $72.7, below the recent low. The initial target price is $85.6, aligning with the recent high, allowing for a quick profit if the anticipated rebound materializes. To refine this strategy, I'll incorporate Bollinger Bands analysis. If the price touches the lower Bollinger Band, it reinforces the oversold condition, strengthening the long entry signal. The portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Band strategy, and 10% based on the support and resistance strategy. If the forecast price continues to decline and the RSI remains below 30, I will adjust the stop loss to $76.7 and consider a smaller position size. If the price breaks above the resistance at $106, I will take partial profits and reevaluate the trend. This dynamic approach allows for adaptability to changing market conditions and maximizes potential returns while managing risk. Based on the historical data and forecast, ZKsync exhibits significant volatility. The RSI consistently fluctuated between oversold and overbought levels, indicating potential for both upward and downward movements. The Bollinger Bands also show widening and narrowing, reflecting periods of high and low volatility. Considering the recent upward trend in the forecast prices, particularly from November 6, 2025, onwards, I recommend a moderately aggressive strategy focusing on capitalizing on upward momentum. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. The core strategy involves entering a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Given the current RSI of 73.5 on November 5, 2025, and the forecast predicting upward movement, we will wait for an RSI signal. Assuming the RSI drops to 28.7 on November 6, 2025, and the price is at $0.0522, we will enter a long position at $0.0522. Place a stop-loss order at the support price of $0.0696 to limit potential losses. The initial target price will be the resistance level of $0.0786, offering a potential profit of $26.4. If the price reaches the resistance, we will consider moving the stop-loss to the entry price of $0.0522 and setting a new target price at $0.082. This strategy combines technical indicators with key price levels to maximize potential returns while managing risk.